All right. A very good morning, ladies and gentlemen. Hope you're all well. Karibuni sana. Welcome to the Forex Daily Analysis, this beautiful fifth day of March, and happy new month. I know it's we haven't really seen each other since the month began. We've had a couple of technical issues here and there, but at least we've been able to resolve those issues, and at least we should be back to regular programming. So you should be able to find us here every Monday to Friday, 9 a.m. in the morning. And of course, we'll try and give you as much value as we can. So for the sake of guys who are new here, John is my name. I'm a trader with Afriforex. Afriforex is a trading unit, so we also do have the rest of the team here. So in case you do have any questions, feel free to ask them on the chat box. The team will be getting back to you, but I will also be looking at the questions also in the chat box towards the very tail end of the session. But you don't really need to wait until the very end. You still can ask even as we do continue progressing on. And also remember to join the Telegram channel. At least when you do have technical issues, then at least you will find the watch list and any other communication that we do want to pass out to you. That normally happens on our official Telegram channel. So make sure that you also do join that channel as well. So we're going to jump straight into it, and we're going to start off by looking at our watch list. So you can see the watch list right there. So Wednesday the 5th, you can see what we're going to be watching out for. So buying opportunities on the Great British Pound, the Swiss franc, the euro, the Australian dollar. And we're going to be mixing and matching that up with the selling or the currency pairs on the sell side. So the New Zealand dollar, the Canadian dollar, the US dollar, and the Canadian dollar. Then after that, we're going to look at the indices and the commodities. You can see just a couple of changes, just silver just moving to the buy side. We'll see how things end up going. And of course, since we haven't had these sessions the last few days, and of course, including yesterday, so we won't really be doing much of a recap. But we're really happy to see that guys have been actually sending in screenshots, and we've been seeing them, which is good. So even when we're not doing the daily analysis, at least it's good to see that the watch list that we do send in on the Telegram channel is actually of benefit to you guys. And at least we've been seeing a handful of screenshots. So at least we can showcase the ones that we did get yesterday. So we'll start off with these ones from Dan Bickett. So this is on the Dow Jones. So I can see you got a couple of selling opportunities as the market was coming down. Stop losses for all your trades, I think somewhere within this area for both trades, I should think so. And of course, as the market continued to move down low, I'm definitely sure that you are managing and definitely closing some of or taking some of your profits. So this is some good trading, some sophisticated entries in terms of where you got the sells, but at least you did make some good gains on those particular trades. So shout out to you for that, Dan Bickett, and of course, keep up the good work. So we also did get, this is the NAS 100 also from you. So I can see that you got a selling opportunity right here. Market came down. You can see that your stop loss, you did bring it to break even or beneath break even, which is somewhere within this region here. But I think you did mention you did get stopped out when the market did actually move to the upside, which is okay. I mean, like we always say, break even exit, or at least taking out some profit is definitely better than a loss any day. So when the market came back in, I think you definitely got stopped out, but at least I think you did mention that you did end up getting some other entries. I think this one was the one that you did get stopped out when the market pulled back in. And then after that, I don't know, I think it was on the NAS, on the Dow Jones, if I'm not wrong, which I think you did get a second entry. Yeah, it was this one. So this one was the one that you took a second entry. This one, you got one entry here, came down with it, which was good. And I think that the one that you mentioned, you did get a second entry was actually this one. So I think when the market pulled back in, you got stopped out, which is okay. You know, you're targeting down within there, but at least you did end up recovering, you know, when the market did end up coming down. And I think that's when you got these two trades right here. So I think when the market pulled back in this move right here, I think what actually ended up getting you, but it's okay. So you're a real fighter on the charts. So shout out to you for that, Dan Bickett, and of course, keep up the good work. So we also did get a screenshot from George. Last but not least, this is on the US dollar against Canadian dollar. So I can see you got a buying opportunity on this one, somewhere within here, which is good. Bit of a sophisticated and quite a technical buy to get, but I'm hopefully sure that you did end up reading this on the smaller time frame. So you got the buy there, stop loss already above your point of entry as the market was moving up. Hopefully you did manage your trade somewhere within there. Definitely seems like a bunch of sellers were waiting to possibly give you issues there, and definitely a bit higher up. But at least good to see that once the market started to move in your favor, stop loss already above your point of entry. So this is some good trading as well, George. So keep up the good work. So shout out to Dan Bickett, shout out to George for those screenshots. These guys are really happy to see your progress. Remember, guys, if you do get any trades, whether good or bad, feel free to send them in to us. Our contact details should be there on the video description. And of course, we'll give you the much needed shout out. And if we do see something that you can't change to make your trading that much better, then we'll also give you that recommendation. Because I mean, we're here to be a resource to you guys and to be of value to you guys. So feel free to send them in to us via WhatsApp. Our contact details should be there in the video description. So we're going to jump straight into today's watch list and what the charts have in store for us. So hopefully you've taken note of what the watch list is looking like. So we're going to start off with the Great British Pound pairs, mix and match them up with everything on the sell side, move on to the Swiss franc pairs, the euro pairs, the Australian dollar pairs. Then we'll finish off with the indices and the commodities. So the first one, this is the Great British Pound against the New Zealand dollar. So for this one, for today, we will be watching out to see whether we can get some buying opportunities. So these are the three areas that we will be watching out to really see what happens. Hopefully you can end up taking note of them. So we have the aggressive down here, which is going to be the last area where we will be attempting our buys. Semi-aggressive conservative there, and of course the conservative at the top. So you can see that the sellers have been giving issues of this region at the top. So we don't really want to be hitting our buying opportunities, especially when the market is just so close beneath this region here. And you can see that to some extent, the market is turning into some sort of a range. Sellers are reacting. Let them calm down. And if the market sets itself up, I mean, if we're in some sort of a range, definitely in terms of market structure, the best area to get your buying opportunities is definitely at the bottom of the range. So let the market calm down, let it set itself up. You could find that at around 5:30, maybe price could be somewhere within here and we could get a very good buying opportunity. So let's see what happens. But also remember that price can also come in a bit lower, especially if the big boys do need that price. It's also a strategic level. The market broke to the upside, never really retested this area here, so we could possibly find the market coming back in within there. So if it does, at least we also should be ready for that. So watch out for that. Let's see what happens. Remember the red SNR, that's going to be the last area where we will be attempting our aggressive buying opportunities. In case the market breaks and holds beneath that region to the downside, then unfortunately, there will be no buying opportunities for us, and that currency pair will be falling off our watch list, and we'll have to look for opportunities elsewhere. So the next one, this is the Great British Pound against the Canadian dollar. So for this one, we're going to be trying to see whether we can get some buying opportunities as well. So these are the three areas we've mapped out. So let's see what happens. You can't see that the buyers went up aggressively. This was during the US session yesterday. The sellers pushed the market down quite aggressive. There was, I guess, something to do with the cards. Not quite sure exactly what it was, but you'll see that most of the cards did actually end up having these massive pushes at around 11:30. Not quite sure what happened. And you can see that the market came down, it's bouncing off this region. But if you look at how the buyers are acting, this is definitely not the big boys. You can see that they're really struggling to push the market to the upside, maybe based on how that seller came down. There's a possibility there could be another push to the downside, I'm thinking. So it's either the market will push down, maybe attempt to break this region to the downside. If that ends up being unsuccessful and hopefully the buyers and the big buyers now hopefully show up, I think we potentially could get a very good buying opportunity to move up. So I'm expecting maybe something like that. But of course, in case the sellers do push the market a bit lower, and I mean, these big sellers do show up, then we could find the market back within this region right here. So if that ends up being the case, it's just a matter of waiting to see at what point the big sellers give up, when the big buyers do actually show up. And after that, I mean, if everything aligns with the times, then we could get some very good buying opportunities. So let's wait and see what happens. But definitely right now, based on what the market is doing, those are definitely not the big buyers just yet. So let's be a bit patient. Let's see what happens. Remember, in case the market breaks the red SNR to the downside, then unfortunately at that point in time, there will be no trade for us. But at least if the market comes back to the upside of the red SNR, then we potentially could try and see whether we could get some buying opportunities. So the next one, this is the Great British Pound against the US dollar. So for this one, we're also going to be trying to see whether we can get buys. You can see that for this one, the pullback, like we've seen on the New Zealand dollar and the Canadian dollar against the Great British Pound, is not really happening on this one. So this one tells us that the US dollar is really getting hammered, and a lot of weakness is showing on the USD pairs. So let's just hope we can get the market pulling back. Right now, in terms of the buys, this is a bit of a chase. At least let's try see if we can get the market maybe hopefully reacting off that area. If we get the market pulling back within this region here, I think the best buying opportunities could be somewhere within here. Also could find that maybe the US dollar might attempt to just fight a bit, and maybe we could get the pullback coming in, potentially maybe even within this region here. I mean, for those of you that are real snipers on the charts, possibly reading the story on a smaller time frame, 3-minute time frame, potentially could get a very small and quick buy of this region right here coming up. So you also need to have a very tight stop loss, because the risk to reward, I mean, you're only looking at about 30 pips. So if you have a stop loss of maybe around 10 pips or thereabout, or at least maximum 15 pips, potentially could get a 1:2. But hopefully we get the market coming back in a bit deeper, back within here. I think the best buying opportunities could definitely be somewhere within here. So watch out for that. Also watch out for this region at the bottom. There's also a possibility price can come back in within that region. If it does, then at least we also can try and see whether we can get some aggressive buying opportunities. And the good thing about those buys, especially if we get the pullback coming in a bit deeper, is the fact that potentially we could get more risk to reward. So just make sure that you actually do end up watching out for that. So the next one, this is the Great British Pound against Japanese yen. So for this one, these are the three areas we will be watching out for. So just make sure that you do take note of them. So we do have the aggressive down within here, conservative right at the top, somewhere within this region right here. So watch out for that. And we do have the semi-aggressive conservative somewhere in the middle right here. So just make sure that you do watch out for these three areas right here. So hopefully you can end up taking note of them. Can see that this one is in some sort of a range that's starting to form within here. So if we could get price potentially coming back in within this area here, maybe get some sort of a slowdown, maybe a spike to the downside, which could potentially end up inciting the sellers to really come in before the buyers do show up. That would be nice, but at least we do need to see the market come back into the upside, and potentially we could blast to the upside of this region, and we could potentially make higher highs and higher lows. So make sure that you watch out for that. And of course, watch out for the region at the bottom. This is definitely going to be the last area where we will be watching out for the aggressive buying opportunities. If the market breaks and holds beneath that region to the downside, then unfortunately, there will be no buying opportunities for us. So watch out for those three areas. Also watch out for correlation. I mean, you can see the GBPs are definitely showing a lot of strength. We see the market starting to move, and if you see that happening on one of them, make sure that you have a look at the others. That will give you that much more needed confidence that you need to actually end up jumping in on any of the GBPs. I wouldn't really advise that you jump in on all of them. If they do end up showing up opportunities, make sure that you jump in on the one that shows you the best, gives you the best risk to reward. Because if you take all of them and something happens and the markets go against you, then you'll be looking at a lot of losses, because you've exposed yourself to a lot of risk. So just make sure that you really also do factor your risk into your trading. It's everything when it comes to trading. So that's pretty much it for the GBPs. So we're going to move on to the CHF pairs. We're going to start off with the New Zealand dollar against the Swiss franc. So for this one, we're going to be trying to see whether we can get some selling opportunities. So these are the three areas that we've mapped out. So aggressive right there, some aggressive conservative somewhere within here, and we do have this area at the bottom right here that we can potentially end up maybe targeting. So you can see that the market came up yesterday, seems to have done some sort of probes, seems to be holding within here. So could potentially find that maybe at around 11, price could potentially end up maybe attempting to go up. Hopefully we do see a sign of the big sellers coming in, and I think we could end up taking some selling opportunities, targeting down within here. But of course, if the market breaks to the downside, you definitely will need to watch out for this area, even if you will be targeting areas much, much lower than that. So watch out for that. But alternatively, also what could happen is, I mean, if these bars are not yet quite done with their push to the upside, if the market breaks to the upside, continues to hold to the upside of this area, then we could potentially find the market coming back in within this area here. We get the market slowing down and the buyers slowing down, maybe the selling opportunities might happen later on during the US session from around 4, 5:30. So let's wait and see which option we do get. But so far, it's looking like the sellers are definitely somewhere within here. Based on the fact that the market has probed within that area, it seems to be holding to the downside. I know some of you guys are real cowboys and ninjas on the charts. I mean, if you want to try out some selling opportunities, let's say at around 11, even just going back to it, then at least your stop losses, if you really want to be conservative, will have to be somewhere higher than this. Because in case the market comes in within here, you could find some spikes happening within this region here. And if the market breaks to the upside of this area, I mean, even if you do have your stop losses high up within here, I don't really think it really matters how far you hide your stop loss, because if these sellers are taken out, then I mean that's like your last line of defense. If that is taken out, it doesn't matter how far your stop loss ends up being, the market will possibly end up finding you. So you're better off getting stopped out, and you could end up taking a second attempt higher up, maybe somewhere within this region here. So watch out for that. And of course, if you want to be real cowboys, of course, if you do have your stop losses tighter, maybe within these regions here, it's okay because the risk to reward will end up being higher. But I think you also need to have a stomach for losses, because I mean, if your stop losses are within there, then you're within the line of fire. You could easily end up getting short. So also have that at the back of your mind. So the next one, this is the Canadian dollar against the Swiss franc. So for this one, we're also going to be trying to see whether we can get some selling opportunities. So these are the three areas that we will be watching out for to see what happens. So hopefully you can end up taking note of them. For the sake of guys who are new to how we end up looking at the charts, I know that we're looking for buying opportunities on the Swiss franc. And when we've come to them, you're saying that we're looking for sells. The reason being the Swiss franc on this ones, the first two currency pairs that we've looked at, and also the third, the Swiss franc is to the right. So it's the counter currency pair. So we should be selling the base currency pair, which is the one on the left, and simultaneously we will be buying the Swiss franc, which is exactly what we should be doing. So these are the three areas we will be watching out for on this one. You can't see the buyers came up aggressive. The sellers are retaliating, but we can't say that there's a big seller just yet. So there's a possibility price could bounce off either within here or somewhere within these regions here. It could struggle down. But I think those buyers might attempt to go up higher in case they do end up being unsuccessful and the market comes back into the downside and actually holds to the downside. Then I think after we see that big sign or sign of the big sellers showing up, then I think at that point in time, that sell will possibly end up coming down. So watch out for that. But there's also a possibility price could also attempt to come back in within here. Just looking at how these buyers came up, maybe the market could bounce off here. They could have another attempt to go up higher, and make sure that you watch out for that area. Maybe at around 4, 5:30, price could be back within this region right here. We do need to see that slow down, of the sellers, of the buyers, the sellers really coming in, the market holding. If everything aligns with the times, then at least we can get those selling opportunities to come down with the market. So watch out for that. Also remember to watch out for your risk, and no matter what you do, make sure that you always do trade with a stop loss. So the next one, this is the US dollar against the Swiss franc. So for this one, we're going to be watching out for sells as well. So these are the three areas that we've mapped out. So hopefully you can take note of them. In terms of looking for the sells, right now is not really the best time to look for the sells, because the main question you should be asking yourself is if you hit the sell here, where are you going to put your stop loss? And if you put your stop loss here and the problem area is here, then that trade just doesn't make any sense. So it's either the market breaks to the downside of this region right here, because you can see that we're approaching some sort of a buyer's area. We're not quite sure how the buyers are going to react off here. But if they do react and they push the market back up higher, at least you're better off getting the sells either within here or somewhere as close as possible within this region. So let's see if that ends up being the case. So it's either the market off this area here, because we also do have some sort of an SNR, the market possibly comes up a bit higher, and at least we can use these sellers within this area here to get some selling opportunities. And at least if we do target back down within here, that's a decent trade. So that's the first alternative. The other one could be at least waiting for the market to first break to the downside of this area on the pullback. If we get the market coming back in for some sort of a retest within this area, then at least we could attempt and see whether we could get some selling opportunities. So watch out for that. But of course, also watch out for the region at the top. It's a bit of a long shot, but I mean, in case the market finds its way back within there, then at least you should be aware that that is going to be the last area where we will be attempting our aggressive selling opportunities. So the last one on the Swiss franc pairs, this is the Swiss franc against the Japanese yen. So for this one, we're going to be trying to see whether we can get some buying opportunities. So these are the three areas we've mapped out. So this one we will be watching out for buys. Of course, reason being the Swiss franc is to the left, so it's the base currency pair. It's the basis for what we should be doing. So for this one, those are the three areas. Look similar to the rest of the yens that we will see. So remember the Great British Pound against the Japanese yen. The market was looking something similar to this. This one also kind of similar to that one. So these are the three areas we will be watching out for. So let's see if we can get the market pulling back in. We want to get our buys as close as possible within this area here. If that does end up being the case, we could find the market maybe spiking, maybe trying to get, a hold of this buy somewhere within here. Well, I'm just thinking and anticipating. And if the market pushes back to the upside and actually holds within here, maybe you could find the market maybe attempting to actually take out this level or this region to the upside. So let's see whether that ends up being the case. But there's also a region of interest just beneath this region here. And of course, when the market broke to the upside, never really retested there. So there's a slight possibility price might just come back in within there. If it does, then I think we can also get some very good buying opportunities within here to push to the upside. So hopefully you have taken note of that and everything we've discussed of the Swiss franc pairs. So right now we're going to move on to the euro currency pairs. So we're going to start off with the euro against the New Zealand dollar. So for this one, we're going to be trying to see whether we can get some buying opportunities. So these are the three areas that we've mapped out. So you will also see that the euros have been showing a lot of strength, a lot of good correlation that's happening across the board on that front. So in terms of looking for the buying opportunities, right now is not really the best of times. You can see that we're within some sort of a seller's region. The market came up, tapped within that region aggressively yesterday. The sellers reacted. Right now, we're back within this area here, and you can see that the sellers are somehow seeming like they want to come back in. So we'll give them the benefit of doubt. Could find that all through the London session, price might be on the pullback phase, maybe at around 3-4.30. Price is back in within this area or somewhere as close as possible within this region, because that's where the buyers are. Like we always keep on saying, buy with buyers, sell with sellers. Right now, if you hit the buy there, you're buying with sellers, and that's not the way trading really works. So let's wait and see if either we can get the pullback coming in. If that doesn't happen, it's okay. If the market continues to rally up and the buyers show up, it's okay. I mean, you shouldn't really feel FOMO, the fear of missing out, especially when the market starts to move to the upside. Let the market move. If it moves to the upside, wait for the pullback. When the market comes back in, at least you'll have that confirmation, and that trade will give you, lesser issues possibly on the way going up, as opposed to chasing the market as it's attempting to go up. So let the big boys break this level. On the pullback, at least you could try and attempt to get that trade. Similar situation with what happened here. You can see that the market broke to the upside, went up. I mean, even if you didn't get that trade, it's okay. When the market came back in within this area here, at least attempting those buys, those ones are trades that, I mean, even if you are to go in on bigger lots, you'd be more confident. The reason why many people trade on 0.01 is because they are also not very confident with what they are doing. So that's the reason why we always say it's always best to wait for the pullbacks. That confirmation is very, very important, to help you in terms of your trading, to give you that much more confidence that you need. And also, I mean, those are trades that you can take and possibly leave your computer. The reason why many people also end up being slaves to their computers is because you've taken a trade that you have to sit down and actually babysit the trade. So I mean, it's always best to wait for the pullback. And I know we keep repeating that over and over again. So the next one, this is the euro against the Canadian dollar. So for this one, we're going to be trying to also see whether we can get some buying opportunities. So these are the three areas we've mapped out. So you can see the market went up. remember, like I pointed out on the Canadian dollar pairs, there was some moves that happened at around 11:30, some major pullbacks that happened. You can see that the buyers are attempting to push the market to the upside, but there's a possibility, based on how the buyers are going up, the sellers might actually end up reacting off there once again. And if they do, and price comes back within here, we could find some very, very good buying opportunities down within here. But also you could find that maybe the market could come in here. I mean, if the sellers have nothing to say and the market breaks to the upside, then it's okay if the market breaks to the upside, and we just need to wait and see whether we can get that pullback coming in for us to continue making those higher highs and higher lows. So make sure you watch out for that. Watch out also for the region at the bottom. That's going to be the last area where we will be attempting our aggressive buying opportunities. If the market breaks and holds beneath that region to the downside, then unfortunately at that point in time, there will be no trade for us. So the next one, this is the euro against the US dollar. So for this one, similar situation with more or less the rest of the euros that we've looked at. Can't see the market went up within some sort of a resistance area right here. The market is attempting to break to the upside. It's not yet time to look for the buying opportunities. You can't see that the market had attempted to go up higher yesterday or earlier today, actually, during the Asian session. The sellers were able to push the market back down. Can't see that the buyers have come back in within this same region, which means that you still could find the sellers pushing the market to the downside. So we will be waiting to see whether we can get the market pulling back in, and hopefully we can get price coming back in somewhere as close as possible within here. You know, it's also a bit unlikely, especially considering the fact that the USDs are showing a lot of weakness. But at least if we can get the pullback coming in somewhere as close as possible within here, then we could look for the buying opportunities. If that doesn't happen, we'll have to wait and see whether we could get price potentially breaking above this region to the upside, and hopefully we get a pullback coming back in within here. Then this is an area where we could look for the buys on the pullback. So let's wait and see what happens. Also watch out for the times to see what does end up happening. You could find that maybe during the London session, either the market will attempt to go up high and come back in, and maybe during the US session, it could be here, or maybe the London big boys could push the market down, and hopefully the market could set itself back. Then maybe at around 3-4.30, price could be back in within here for us to look for those semi-aggressive conservative buying opportunities. So let's see what happens. Also watch out for the region at the bottom. It's a bit of a long shot. Like I keep pointing out, the USDs are showing a lot of weakness. But in case the market finds its way back within that area, then at least we also should be ready for that, and also aware that that's going to be the last area where we will be attempting our last buying opportunities. So last but not least, for the euro pairs, this is the euro against the Japanese yen. So for this one, we're going to be trying to see whether we can get some buying opportunities. You can't see, like we've seen on the rest of the yens, you know, the market really going up. I think the yens yesterday during the US session were really getting hammered across the board. So you can see that this one really went up. The market found some sort of a resistance area within there. The buyers have been held hostage, but let's hope and see if we can get the market pulling back in. If we can get at least a pullback, we can read, and at least back within this area here, I think we can potentially try see whether we could get some buys, maybe use these buyers as some sort of leverage, you know, for us to push the market to the upside. So let's wait and see if we can get that. Alternatively, I mean, like we've shown you before in terms of looking for the conservatives, we'll have to wait and see if we can get the market breaking above this area to the upside and quite strong on the pullback. If the market holds, then at least we can try see whether we can get some conservative buying opportunities. So we'll have to really wait and see whether on the pullback the market holds. Don't be a breakout trader. There are definitely quite a number of guys who will end up getting caught out or got caught out within here. You can see that when the market broke to the upside, definitely there's someone who hit a buy within here, and they thought that that's the trade that is going to make them or buy them their next Ferrari. But you can see that the market actually came back in, and that's the reason why we keep pointing out it's very important, you know, to always wait for the pullback. You can see that the market probed within there, went up again, probed again, held to the downside. So, I mean, if the market does that or potentially keeps holding within here, the big boys might potentially need a much better price, and we could find price coming back in within this area right here before we get the buys or these big boys showing up, potentially pushing above this region to the upside. So let's wait and see what happens. Also watch out for the region at the bottom. It's a bit of a long shot, especially looking at how the yens are really getting hammered across the board. But I mean, if the big boys do need that price, then at least we should be ready for that. So that's pretty much it in terms of the euro pairs. So right now we're going to move on to the AUD pairs, and we're going to mix and match them up with everything on the sell side. So we'll start off with the Australian dollar against the New Zealand dollar. So for this one, we're going to be trying to see whether we can get some buying opportunities. So hopefully you can take note of these three areas. So these are the three areas we will be keeping our eyes locked on to see whether we can get some good opportunities, and also areas where we can manage our trades. So you can see that the market is getting into some sort of a range within here. It's not really the best of ranges. I know when we draw them on paper, they're very clear, but this one is a bit of a mess. But to some extent, it is a range. You can see that the buyers are down somewhere within here, and the sellers are somewhere within this region right here, and the market is coming down. So we'll just be hoping to see if we can get price coming back in within this area here, and hopefully the London big boys will be interested in potentially taking off or pushing this market to the upside. And if they do, then at least we can get the buys here. Quite a number of areas we will have to watch out for in terms of money management, because looking at the way the market has been coming down, it's not a guarantee price will get in within here, but it's expected. You know that potentially price could come back in within that area there. So let's see what happens. Of course, if the market breaks to the upside of this area on the pullback, for those of you that are really good at trading, you know, if you get the market coming back in after the breach, you could potentially end up scaling in somewhere within here and potentially end up continue to move up with the market. So watch out for that. Also watch out for the region at the bottom. In case the market breaks and holds beneath that region to the downside, then unfortunately there will be no trade for us. But at least if the market breaks to the downside and hopefully incites a bunch of sellers to come in and the market comes back to the upside and holds, that probe is very important for us to actually end up hitting our buying opportunities to potentially move up with the market. So we'll just have to wait and see what happens. So the next one, this is the Australian dollar against Canadian dollar. So for this one, we're going to be watching out for buys as well. So these are the three areas that we've mapped out. So you can see similar situation with the rest of the Canadian dollar pairs. The market went up. Then at around 11:30, with all the rest of the cards, these major pullbacks that came in, you can see that the market came back in within some sort of a support region. The buyers are attempting to push the market up higher. Not yet quite successful, but you can see that there's some sort of a probe that's happened within this area here. The market seems to be holding to the upside. So let's see what happens. Hopefully the market will tap back in within there. Maybe during the London session, we could get the London big boys to push the market to the upside. If not, then we could find the market maybe fooling around either within this region here for, you know, waiting for the US big boys to come in, or potentially maybe during the US session, maybe also as well. You know, price could actually be back in within this region right here. You know, it all depends on what prices the big boys are actually interested in. I mean, they don't really call anyone to tell them what the game plan is. It's up to us to really find out, you know, just by reading the charts, what potentially they could be up to. So we will be waiting. At least we know that there was a big push going up of this area here. So you could find potentially price coming back in within that area there. So let's wait and see what happens. But also remembering that in case the market breaks and holds beneath that red SNR to the downside, then unfortunately there will be no trade for us. But in terms of the setup, this one is looking quite nice. So just make sure that in case the market or the buys do show up during the London session, that you maximize on that one. So the Australian dollar against the Canadian dollar, make sure you take note of that. So the next one, this is the Australian dollar against the US dollar. So for this one, we're also going to be trying to see whether we can get some buying opportunities. So these are the three areas that we've mapped out. So you can see that the market went up, came back in, tapped within here. This was during the Asian session. The market is attempting to push to the upside. I mean, if it continues to rally up high, it's okay. You shouldn't really be chasing the buying opportunities. But in case we do find maybe the sellers do react and the market comes back in within this area here, and maybe at around 5:30 prices back within here, I think we could get some very good buying opportunities. In case that doesn't happen, you don't really want to be hitting your buys when the market is coming back within this area here, because I mean, we're just approaching a resistance area. You could find the market reacting off there. Sellers have reacted before. It's better to first wait for the market to break to the upside. If the market comes back in on the retest and actually holds, the buy within here is definitely better than attempting buys within this area here. So it's either down here or somewhere within this area, but also watch out for the region at the bottom, down within this area here. If the market finds its way there, then at least you should also be ready for that. So last but not least, for the currency pairs, we do have the Australian dollar against the Japanese yen. So for this one, these are the three areas we will be watching out for. So hopefully you can take note of them. So aggressive down within here, conservative, semi-aggressive, conservative here. You can see just like the rest of the yens, also this one, similar situation. The yen was really getting hammered during the US session. You know, some sort of a pullback is attempting to come in during the Asian session. Let's see if the London big boys will end up lending a helping hand to the yens in terms of strength. Hopefully the market pulls back in within here, and maybe if the US big boys, you know, when they get up at around 5:30 our time, which is around 9:30 their time, then hopefully if they find the market within here, maybe you could find that maybe they could give a push to the upside, and maybe the market might attempt to break this record right here, or potentially even end up going up higher. So let's see if we do end up getting something like that. Alternatively, the market continues to rally up higher, then at least we should be waiting to see if we can get the market breaking above here. Hopefully we get a nice pullback coming in that we can read, and maybe we could get some buying opportunities there to potentially end up continuing to move up with that or with this particular currency pair. So watch out for that. Also watch out for the region at the bottom. In case the market finds its way all the way down there, then at least you should also be ready for that and aware that that's going to be the last area where we should be attempting our last buying opportunities. So that's pretty much it in terms of all the currency pairs. So right now we're going to move on to the indices and the commodities. So you can see gold and silver on the buy side. We do have the Dow Jones and the NAS 100. Those ones are on the sell side. So we're going to start off with the NAS 100. So for this one, we're going to be trying to see whether we can get some selling opportunities. So these are the three areas that we're going to be watching out for. So hopefully you can take note of them. And also remember, when it comes to the indices and the commodities, we're 100% technical, which means that we're reading the story of what's happening on the charts. In as much as the fundamentals may affect things here and there, but primarily we are, really trying to read the story of what's happening on the charts and just keeping up with that story. So for this one, we're still in sellers. The sellers are still fully in control. Can't see that there was a big push to the upside, which is okay. I mean, that's just the buyers doing their thing. But generally, in the overall story and the bigger, picture of things, we're still in sellers. The sellers are still in control. You can see that the buyers came up aggressive. The sellers showed up. Right now, the buyers seem to have kind of slowed down within this area right here. So I wouldn't be surprised to see the market coming down off this area here, maybe just coming to tap back in within this region right here, hopefully maybe during the London session. But the indices and the commodities have a large tendency of moving during the US session, especially during the New York Stock Exchange open. That's when the market really becomes active. So we'll be waiting to see if the London big boys will start to push the market down. If not, we will have to wait and see what the US big boys do end up doing. But this is a very good sign, to tell us that the sellers are actually here. Considering the fact that the sellers were here, the market came up aggressive, the sellers showed up, and the market is actually holding just beneath this region to the downside. So it tells us that this area, there are a bunch of sellers who are waiting within there. So we'll just have to wait and see what happens. But also remember, there's also this region right here. In as much as it looks like the sellers are interested, they can also end up not being interested just quite yet. And you could find that maybe they want the market to move up a bit higher, invite more buyers to come in, and you could find the big sales possibly happening off this region to the downside. So watch out for that. Also watch out for the region at the top right there. So in case the market breaks and holds above that area to the upside, then at that point in time, we're going to be switching to buying opportunities. Of course, you can't take the buys more confidently. I mean, you do end up looking for buys when the market is holding beneath the red SNR. It's okay. You just need to be aware that, the buying opportunities that you're taking are, counters, and don't really try and go hard and go home on them, because, the party that is in control of the market, who are the sellers, can actually show up at any given point in time without any warning, and you don't really want to end up getting caught up in that. And also in terms of how far you end up targeting with the counters, don't really end up targeting too far, because once again, the sellers who are in control can show up at any given point in time without any warning. So the next one, this is the US 30 or the Dow Jones. So for this one, we're going to be trying to see whether we can get sells, and it's best and advisable to look for sells because we're still in sellers. We'll see that the market has been coming down. So that means that the sellers are actually in control. The buyers have been giving pullbacks. I mean, it's their right to do so. So you can't see that for this one, yesterday, almost similar to what we saw on the NAS 100. You know, the market came down, tapped within here, the buyers showed up, but you can see that the sellers also shut them down very fast. And after that, you can see that the market has been thrown into some sort of confusion. So we will be waiting to see if we can potentially get the market coming back in within this area here, if we get the market slowing down and the buyers really slowing down, and we see the big sellers showing up, because we know that the sellers are potentially somewhere within this region, then we could try see whether we could get some selling opportunities to come down. But also watch out for the region at the top. I mean, if the market breaks and holds to the upside of this area, there's a possibility price could attempt to push itself up a bit higher, and it's not a guarantee that price will end up coming back in within this region at the top here. I mean, there's also an area here where you can see that the sellers did actually push the market to the downside. But in case it does, then at least we know that this is going to be the last area where we will be attempting to see whether we can get our last and our aggressive selling opportunities. So watch out for that. But remember that the bias is to try to see whether we can get selling opportunities. If you do get buys, it's okay. Just make sure that in terms of risk management, you keep that quite tight. So the next one, this is silver. So for silver, yesterday we're trying to see whether we could have gotten some sells, but that was until the market broke, I think, a level that was somewhere within this area here. Consider the sellers had reacted, but when the market came back in, the sellers didn't quite do anything. So when the market broke and actually started to hold to the upside of this area, we switched the bars. So for this one, we want to be trying to see whether we can get some buying opportunities. So hopefully you can take note of these three areas right here. So for as long as we're holding above this red SNR, the bars will be to try to see whether we can get some buying opportunities. Right now, the market is going up. We're hoping we could get the market just coming back in on some sort of a retest back within this area. And if that happens and we get a nice pullback that we can't read, you know, reading the lower lows and the lower highs, the market slows down within here and the bars show up. And just looking at the times, hopefully during the US session, I think we could get a very, very good buying opportunity on this one. So watch out for that. Also watch out for this region at the bottom. I mean, there are quite a number of levels that the market could tap back in. I mean, the levels that we've shown here are the major levels, but there are also quite a number of minor levels that are in between where you could find the market potentially coming back into, and you still could find the buying opportunities happening. But at least if the market comes back in within here, definitely we could get some very good buys targeting high up within this area. It's a major level high up there, but also you will need to watch out for somewhere within here or wherever the market ends up turning, especially on the way coming up, because you could find that the sellers within there could also give you some sort of issues. So watch out for that. And of course, make sure that you bear in mind the timings that we do keep on pointing out. I mean, if things are not really working out during the London session, just be a bit patient, wait for the US session. Maybe the market just needs to set itself up and you could find some very, very good buying opportunities on silver, gold, and of course, good selling opportunities on the NAS 100 and the Dow Jones. So last but not least, we do have gold. So for gold, we will be trying to see whether we can get buying opportunities. So these are the three areas we've mapped out. Can see that the market is getting into some sort of a range to some extent, which tells us, or which should tell us, that the best buying opportunities are definitely down within here. So don't let FOMO get you when you start thinking that the market can't come down. It can. There's a possibility it can, and there's a high probability it can. You know, just looking at the market structure. So you could find that during the London session, we could be on the pullback phase. Then maybe at around 4:30. I mean 5:30, you could find the market back within here for us to look for those conservative, semi-aggressive, semi-conservative buying opportunities. So watch out for that. But there's also a possibility price can come back in within this area. I mean, the big seller who's actually holding the market is actually sitting within here. And the market can still come back in all the way downhill within this area here. And we'll still be trying to see whether we could get some buying opportunities. But in case the market breaks and takes out this buyer, and the market actually holds to the downside, at that point in time, we can confidently switch to selling opportunities. So, I mean, right now, considering the fact that we're in a range, I know some of you may be looking at this and you're thinking, maybe I should take a sell. Well, you could take some short-term sells. It's not a guarantee that price will get all the way down to within here. But that's the reason why I'm saying that if you take the sell, then that means that in terms of, watching out for your risk to reward and really making sure that you're really moving your stop loss as the market is coming down will be a good idea, because the buyers can easily show up at any given point in time. But also you can take down your risk. I mean, in terms of looking for the trades going up, because the market is going up. And like we always say, the trend is your friend. For the buys, let's say if you're going to be risking 2%, that's okay. For counters, because you don't really want to open up too much of your risk, you could potentially end up taking them on maybe 0.5%, maybe 1%, so that even if you end up losing on the sell, maybe an attempt to come down, at least when you get the buy going up, you won't be playing a zero-sum game where you will be recovering the money that you lost when you are attempting the selling opportunity when you're trying to be a cowboy. So at least if you end up having the loss or the risk a bit smaller on the counter, then at least when you get the trades in the direction that the market is moving, that might be much, much better. In any case, that's what us guys normally do in our trading. So hopefully you've taken note of that. Let's see what happens. Gold has been going up pretty much the whole of this year. I think it's something to do with, of course, the USD is showing a lot of weakness this year, but also something to do with, I think, the central bank, the big central bank that controls all the central banks in the world. I can't quite remember what it's called, but they or they allowed the central banks in the world to actually end up holding more gold reserves. So I think that has caused gold to actually end up going up, because if there's more demand for gold, then definitely, I mean, if there's more demand, prices do end up going up. That's how things work in the free market. So I guess we will see gold potentially continuing to go up. Whether it's going to get to 3,000, we'll see. But we'll just have to wait and see what does end up happening. So looking at the chat box, and of course, for the guys who joined it a bit late, feel free to take note of what the watch list is going to be looking like. So I see African Sun, who is Tony Duck. Good to see you, Tony. Karibu sana. I see Margaret. You're saying good morning. Glad you're back. Thank you so much. We're also glad to be back here. I see Tony, you're saying going through all these markets and spotting opportunities in everyone is quite a skill, to be honest. Appreciate all your daily efforts, team. Thank you so much for that, Tony. Of course, it's something we've been doing for years, and of course, perfecting our art over time. So not been very easy, but of course, trading is an art, and you become better over time. So I guess we perfected our trade over time, but thank you so much for that. Much, much appreciated. And also, just in line with that, even as I finish, I know we normally give guys so many opportunities, and maybe sometimes it may get a bit confusing in terms of what should you be looking out for. I mean, if things show up, like today we're looking at about 16 currency pairs. If you add the indices and the commodities, we have a watch list of about 20 things. And maybe some of you are confused and you're wondering, okay, so how do I end up getting all these opportunities? The game plan and the whole point of this is not to actually end up getting everything that we end up showcasing. Even for us, we don't get all the trades that we showcase here. So it's a matter of, at least if you're looking at more things, there's a high probability of you finding something. When you're looking at one currency pair, and I mean, this is just our view. It's not the overall view. And when I speak, I'm not speaking in terms or on behalf of the entire industry. But at least if we end up having more currency pairs, at least finding 2 or 3 good opportunities should be a bit much easier. Because, I mean, even for us, yes, we'll end up having the watch list with everything. But in terms of the opportunities we end up getting in a day, we only end up getting maybe 1, 2, maximum maybe 3 very good opportunities, because not everything is going to align exactly what we need to see based on our trading plan. So this is like a menu in a restaurant, and I've said that before. And when you go to a restaurant, when you ask for the menu, you can't eat everything in the menu. I think that's quite ridiculous. So you end up picking what fancies you, and that's the reason why we end up having a huge watch list, so that at least we'll end up gauging and seeing which kinds of pairs at least will end up giving us what we need to see, which ones will end up giving us the best risk to rewards, and of course we'll end up picking those ones and leaving everything else. So make sure that you also factor that into your trading. But of course, in case you're finding trading hard, that's the reason why we are here. Make sure that you do join our academy. We do have the Amplified program, which is there. I think there should be a link in the video description, and you can end up signing up for that. But also feel free to reach out to us either via WhatsApp or give us a call, and we'll see how best we can end up helping you. So I guess that's pretty much it from me. Guess we'll see you guys tomorrow. Remember, if you get any trades, feel free to send them in to us. I'm sure by now most of you do have our contact details. If not, they should be there in the video description. And I see Tony Dark is saying to that. I think maybe about eating everything on the menu when you go to a restaurant. Maybe that's what you're talking about. But anyway, thank you so much, guys. Hopefully we'll see you guys tomorrow. So with that, happy trading and bye for now. May the pips be with you. God bless.